So, as usual, I'm starting off with the dollar index. That's moving according to the script that I've laid out over the last few days. I've been talking about the Dixie getting up above par. A couple of the numbers that I'm looking at are par 33, par 55. Perhaps we get there into the Fed minutes if the Fed minutes are hawkish, leading people to expect the Fed to move in December. So we have the minutes coming out in an hour. But last week and this week, I've been talking about extending this move up to above par. I do believe that on the intraday, just like on some of the individual instruments, we're beginning to get some divergences. Let's look at a 4-hour chart. And let's go back a month. And you'll see that today we're at new highs. We should have a non-confirmation here on the RSI, which is exactly what's happening. We are diverging. Here was your confirmed high, so we've been diverging since the beginning of the month, about the 7th, and we're continuing to get divergences here. So to me, this is a terminal thrust that I'm looking for in the dollar. I'm not calling for a dollar crash, but the whole world universally is one way right now. Everyone's talking about parity and sub-parity as a lock, and they could be right, but I think there's going to be a shakeout of too many dollar bulls in the next few weeks. So there are a couple of ideas I want to share with you guys, and initially I'd look for maybe another 50 points or so on the upside in the dollar index over the next 24 to 72 hours. And my reversal candidates are shorting opportunities in Canada, which is something I talked about on Monday. We got to my numbers during the webinar. And crude bounce, something I talked about, crude bounce, and that took Canada down. But the continued strength in the dollar is setting up another shorting opportunity in Canada, maybe around the same levels. In fact, I think Amit, you were here Monday and heard me talk about that potential top in USD CAD and a bounce in the crude oil market, in fact, just minutes before it manifested. You remember? And nice to meet you, Robo. So again, if you just draw a trend line here, you have a downtrend and non-confirmation setting up in the Dixie. And this could be drive 1, drive 2, or this could be 1, 2. We're setting up a third drive to a top. So my view is negative, looking for a top in the dollar in the next 72 hours between par 33 and par 55. Give me a Y if you understand that analysis. On Monday, I said that the S&Ps would rally with the dollar, and here we were. We did have a big rally in the S&Ps. Doesn't look completely complete. I don't believe we're going to go to a new high. It's possible, but I'm looking for some kind of failure here with the dollar. I believe this rally in the S&Ps will roll over when the dollar does next time. So give me a Y if you're with me, and my view is that this could end up being a failing rally in the S&Ps and the dollar coinciding around the same time, because I think that the market has been benefiting from flows into the U.S. and people buying U.S. dollar denominated assets basically on a flight to quality issue. Everyone understand that? Give me a Y if you do. So this was the crude oil market that I talked about that's telling me there's a chance for the Canadian to be topping here. And during the webinar on Monday, I talked about it and showed it, and we reversed during that session. Probably 10 minutes after I was talking about the crude oil market, we had this bounce. It's now giving it back, so this is setting up an opportunity for another shorting opportunity in the USD CAD. I'll show you the divergences and how that's setting up. So we're probably going for these lows on the deferred contract, but again, I could show you some intraday stuff that would show that we're in the third drive in crude, and perhaps we spike under this low in the next couple days with the strong dollar, and once dollar strength begins to recede, we get some type of bottom in the crude, some type of recovery in the crude, and with that, that could post a top or a high in the Canadian dollar for a pretty good correction. Give me a Y if you're with me on my correlation work between USD CAD and the crude oil market. So I also covered gold. I said gold was destined for new lows. That too is manifested, and I said as long as gold is heading down, and I do think that there's going to be a significant bottom coming here in gold between 1052 and 1030 in the coming days, but I was right about a breakdown in the gold. So here we were Monday after the Paris attack, and I talked about it fading already, and that I was looking for the 1070 level to give way, and that's what's happening right here. I don't believe we're complete yet in this washout, but as I've mentioned before during these webinars, I was taught old school, and some of the mining shares, although gold is making a new low, they are not confirming the lows in gold. So until I get constructive on the gold, I can't get constructive on the Aussie. Give me a Y if you're with me. So my correlation is between the gold and Aussie, the crude and USD CAD. And now let's take a look at the yen. I said the yen needed to make new highs. We're on the verge of that manifesting as well. So to me, the yen is a risk-on, risk-off currency, and also has a pretty tight correlation to the bond market and interest rates. When rates are going up, US dollar yen goes up, the weaker yen. So beginning to look like we're setting up some type of turn here in the bonds. There could be one more flush in here, but as I've been saying, I'm looking for a top in US dollar yen, and I needed new highs for that to manifest, and we're now manifesting that move. Give me a Y if you're with me on the correlation of US dollar yen S&Ps for risk on, risk off. Everyone with me? So the theme of this is that we're looking for a high in the dollar, probably within a 3-day time window. My best guess, someone asked me when I thought it would happen. I said Wednesday. Wednesday's not over yet, so if we get a hawkish statement in the minutes, the dollar could finish its move to the upside. I was talking about 105.80 in the euro as being a possibility when the dollar completes. Give me a Y if you recall it from the last webinar. And also, are there any questions on the outside markets before I move on to the individual instruments? Any questions on the gold, the oil, the Dixie, the S&Ps, and the treasuries with my correlation work? Any questions on the outside markets? Okay, very well. Let's move on to our individual instruments. As you recall, I was talking about 105.80 as being a potential target in the euro here. That's still viable. 105.75. So we had another failing rally, and I said that we were going to be looking for 105.80, 106 into this trend line here. So that's another 60 pips or so. And as you can see, at this new low, and this is a new low for the move, we are diverging above 30. So this is going to be my buy zone under the 106 handle in the euro over the next couple days. Looking for a retracement. I guess you have to risk the lows under the 104.40 level. But I'm not talking about 105.80. And what's important to me is when you're tracking it, is that the RSI in the 4-hour, at least the 4-hour, stays above 30. If it just collapses and we're under 30, that's not the setup. So it's not just getting to a price for me using the real simple implicator, it's how it gets to a price, which is just as important to me as getting to the price. Give me a Y if you understand that. So what I'm looking for is another divergence above 30 in the euro when we're down at these levels. Give me a Y if you're with me. And this would actually be first, second, third divergence if that happens. So I was talking about a potential third drive to a bottom. Here's drive 1, confirmed low. The next low we diverged. These lows we diverged again. And if we have one more low into the third drive down here, 580, 560, and the RSI stays above the 30 level, to me that would be a divergence to trade. And perhaps you wait for a reversal candle once it comes off these levels to go with it. Is that clear? Similar to what I showed you in Canada on Monday. Similar to what I showed you in Canada on Monday. Canada, we were here. I talked about this third drive. Sometimes we get through it. I was looking for a high of 380. The high was 370. But you asked me when I thought we could see 380, and I said Wednesday. So to me, it looks like there's going to be another shorting opportunity up around these highs. The 134, we might even take out these highs. 134 on the dollar index. But the same type of divergence we had here. This is a 3 drive to a top formation in Canada. And this would be a 3 drive to a bottom formation in euro. Just a mirror image. Give me a Y if you understand it. And the more you pay attention to it, the more you'll recognize it. Okay. So, moving on to, before we leave the euro, I just want to show you the euro pound and just show you how we're seeing the beginnings of the euro pound beginning just to act a little better. You see here in the euro, we took out these lows, right? Check this out. We did not take out these lows yet in euro pound. So we're actually getting a higher low in euro pound. I'm not saying that we're not going to test these on another, at my targets in the euro, but you could see that the euro is leading the way down and euro pound is beginning to show relative strength. So I favor buys around on any more divergences. Next low in euro pound should hold above the 30 level. So I select the euro pound for a buy. If they go for another stop hunt here, I just wanted to show you the difference. Look at this candle. It's almost a reversal candle. We have not taken out this low. So I look for market messages like that. Whereas in the euro, we have taken out that low. And we have another divergence. Okay, so the turn could happen at any time. What I do is I might put a very small position on just in case I don't get to my targets and then use it as an add-on should we get down to 105.80, 105.70. Because we are diverging right here, right now. Give me a Y if you see it, and a Y if you see the fact that even though euro made a new low, euro pound, at least for now, is not. That's an early market tell that euro pound should really turn before the euro. So we're getting the first indications of that. We didn't have it all the way down. So on a further spike in the dollar, I like the euro pound for a shot to the long side too. around 69.80 if offered, 69.70 with stops under 69. Give me a Y if you're with me. And if I get the bottoming action I'm looking for in euro pound and the euro begins to recover, my preferred long switches from being the euro, from being the pound to being the euro. And my preferred short switches from being the euro to being the pound. Give me a Y if you understand it. Every time we get together, I cover euro pound because many people trade both individually. And even if you don't trade euro pound, it's a great indicator for trade selection on which should be your preferred long or short between euro USD and cable. Everyone with me on that? So, also, I think someone asked me about the Swiss on Monday, and I said I think we were going to make new highs, and we are making new highs. We're actually getting up to this wedge line here in the Swiss. I'm not crazy about the RSI reading here, but I wouldn't be long Swiss anymore. I think that there could be a decent pullback on a turn in the dollar. It's not ideal. It's above 70 already, but I think this is topping and we could have a pretty good pullback. Potentially this high that's setting up, here's another third drive to a top formation. Here's a look. Sometimes, just like Canada, they cut through it, but right now it's pretty much right there, isn't it? So to me, this looks like we're getting into an exhaustion area in US dollar Swiss, and if I'm right about being near a dollar peak, we're also near a Swiss peak. Give me a Y if you're with me. Moving over to cable. Cable actually has a couple of three drive formations that it's working. The most bullish one is coming in all the way up here on the 4 hour at the 61.8. Actually, it's a 61.8 retrace. Let me redraw these fibs. So this was a big break in the pound that we came out of the hole at 150. And so far we're failing at the 50% retrace level here in the pound. It's still possible to have a third drive coming up around the 153 level. And there's even a shorter term three drop formation working right in here. So with my idea of euro pound turning and bottoming, I'm leaning more toward shorting opportunities in the pound than in the euro. And here's a couple levels to watch: 52.5, 52.60, and then 53. But if I'm looking for the dollar to come off, I'm really not going to get aggressive on the long side of the dollar in any of the pairs, correct? But if I'm in a certain day where I think the dollar is going to rebound, I'd rather now fade strength in cable than fade strength in euro, if I'm right about a dollar correction coming. Give me a Y if you understand that concept. Great. We've got a brilliant audience here today. So on Monday I said the yen didn't look complete, that we still have to take out these highs, which were 23.60, and we came exactly to 23.60, actually coming off the line here. So I'm viewing this as a short. It still could spike and head up towards 24-ish. But look at it would have been better if we had taken out these highs. The fact that we didn't take out these highs tell me to be patient and wait for another high up around maybe 24, 24.20, But if we start trading back under these moving averages, back under 123, that's a sign that a correction's underway. But I favor shorts in here, in this range up here, looking for risk off to take place with the S&P selling off again. So with the dollar peaking, I'm also looking for a peak in the yen. It's done enough to satisfy. I said look for new highs, and we actually tied the highs. We're diverging here, but I may wait to see the dollar index fulfill its numbers above par before I attack US dollar yen. And really the weakest dollar pairs, you see the yen is achieving new highs, Swiss has made new highs, but Canada peaked when we were here together on Monday, okay? And that's because we got a pretty good bounce in the crude oil market. And I still think there's a chance for 380 to 4, but it's definitely showing less momentum, not making a new high, while the yen is making new highs, right? We're taking out Monday's highs, diverging, but we're taking out Monday's highs. And in the Swiss, here too, we're taking out Monday's highs. What is not taking out Monday's highs? Canada. So which is your weakest between the Swiss and the US dollar Swiss, US dollar yen, and US dollar CAD? Which is your weakest dollar pair between the three? I'll give you a hint. It's the one not making the new high. That's right. So actually, this could be your preferred short. Maybe all we do is double top up there, make new highs by 20 pips, but I'd be on the lookout for shorting opportunities there as well. Give me a Y if you're with me. So I also noticed we're getting some divergence developing in the Kiwi here. Kiwi's making new lows for the move. But this is starting to look corrective to me, so I'm starting to be on the lookout for some type of low developing here in Kiwi US dollar. See, we're making new lows. We've been diverging since this low on the 6th. So for a couple of weeks, we've been diverging. Not saying with the final dollar push we can't head a bit lower, but I'd be very careful being short. Well, you know what? You can't expect perfection in the crap table, but I still think that there, right now we're at 99.80 or so. There may be another 50 points to the upside. But you know what, Amit? No one's perfect, okay? And sometimes I will probe a market if I'm not sure, and then just to have my toe in the water, I'll put a partial position on, right? And then if it goes to the target, I'll put another small position on. At least I have my toe in the water. I don't put my toe in the water in front of big red events, but I don't consider the Fed minutes to be a big red event. Okay? So nothing wrong with probing a market and not trying to be perfect, but to have a small position on in case you don't get that one more jiggle to the upside or that one more decline to complete something. Give me a Y if you understand that psychology. So pretty similar look in the Aussie. The Aussie's not close to making new lows, which is kind of constructive for the gold. So if the dollar pushes up, actually the Aussie looks like it has a chance here to not make a new low. We did diverge here. So Aussie actually looking constructive to me. I think I said you could buy a pullback to 70.60 on Monday. We got down to 70.70, so maybe we're still going to 70.55. We're right at the 61.8 level. But you see the Kiwi's making a new low and Aussie isn't. So between the Aussie and the Kiwi, here's the Aussie 4-hour and here's the Kiwi 4-hour. Which is weaker? The Kiwi, this, or the Aussie, this? So what's your preferred long? You want to buy the strength, right? Of course, they could turn the spread, but we have to go with the evidence that the market gives us. And so far, the evidence is Kiwi's weaker, Aussie's stronger, makes Aussie your preferred long over Kiwi. And maybe even being long Aussie Kiwi. Give me a Y if you're with me. Okay, so I look at some of the Euro pairs, Euro CAD. You know, we caught this pop last week. We're also diverging again down here. I think that there could be a decent trade coming up in Euro CAD, but I'd rather just stay with the pure play of Euro Pound and Euro on a dollar peak or short Canada, looking for yen shorts, looking for Swiss shorts, avoiding pound longs because of my bias there. One of the crosses that I think, if I'm right about the Euro Pound turning, that might be a decent shot coming up here would be in the guppy. Okay, we're starting to diverge here in the guppy on the 4-hour and on the 1-hour. So we're pretty close to a third drive to a top formation. So be alert for some type of guppy short here. Aussie yen, I thought we'd get back up to 89.20, but it's stalling again. I don't want to buy it here or sell it here. I'm more interested in being patient and waiting for a rally back to the breakdown, which if Aussie holds and the dollar comes off, we might have a chance to get short Aussie yen up around 89.20 to 90.30 for a position trade. Give me a Y if you're with me on the crosses. Whereas Euro Yen could be setting up a third drive to a bottom formation as well. Here's another third driver to keep an eye on. Here's one. Here's two. Euro Yen. Watch to see if the RSI holds above 20. Should Euro Yen trade down to 130.40. Maybe there's some counter trend there. Any questions on anything I've covered today? Basically, the theme is I'm looking for a dollar peak and a dollar correction, not a dollar crash. We take it a day at a time, right? A week at a time. But there's such a universal opinion about the dollar right here that I'm going to go out on the limb looking for a dollar peak within the next 3 trading days. Questions? Okay. Well, thank you for your attention. Good luck into the Fed minutes. I think I gave you some good areas to pay attention to. Your best trades are the ones that you plan for and wait for that come to you. So your best work is done waiting for the market in advance to get to an area of interest for you to be a buyer or a seller, not analyzing on the fly. So preparation, and I think I prepared you for some scenarios in several different pairs going into the minutes. So nice to meet everyone. Good luck. Good hunting. Remember, don't just count your pips, count your blessings. Trade, use stops. Reduce your leverage. Use wider stops. Good hunting, everyone. See you Monday.